All right then, good afternoon everyone as we head into another week of trading on Monday the 13th of May. We'll have a look across the calendar and see what is to play for over the course of this week, and really the main focus of attention is going to be US CPI that we do get out on Wednesday. So we'll break it down in a bit more detail as we get to it on Wednesday. We can see core CPI and obviously total rate of inflation, CPI figures plus retail sales. Retail sales might get in our way a little bit on Wednesday. The fact that it's out at the same time, which is a little bit annoying, but that's kind of just what we got to deal with, right? That's the hand that the market is playing this week. So we'll have to deal with that. And we got PPI then on Tuesday. Tuesday obviously being tomorrow. Labour market figures out of the UK as well, main focus of attention, the three of them over the course of this week. Back end of the week isn't really too much, just kind of Tuesday and Wednesday, the important days of this week. But on Tuesday and Wednesday, certainly action-packed days when you factor in Jerome Powell's speech at 3 o'clock tomorrow as well. But these inflation prints, right? Consensus is for them to be lower, apart from the kind of headline month-over-month print. But again, 0.4% inflation is still too high. 0.3% inflation is still too high. So that's in line with consensus. Okay, it's not getting any worse, but it's still not getting any better. That's not really kind of what the Fed will really want to kind of go forward into the kind of second half of this year, when they are looking at starting to cut interest rates, or when some market participants think they're going to cut interest rates. When they initially told us they're going to cut, whether we do or not, I'm not so sure. I mean, I've been saying this the whole year. High inflation not coming down, no interest rate cuts this year. But that's kind of a viewpoint that's now shared across markets, and something that is now accepted by Fed officials, that we may not actually even get a cut over the course of this year. So now that that's the market consensus, a lot of that got to be factored in, certainly in the price of the US dollar. I'm saying the price of stocks. I mean, stocks don't really seem to care, but like what way do you go about this then? I mean, you got to think about where you think the print may land, right? So you've obviously had oil prices. Oil prices have sold off over the month of April. They've come down a bit, so that is positive for inflation to be lower. But difficult thing. I mean, if you come back, let's go custom and let's just go back a little bit. Now we'll break this down in more detail over the course of the week when we get towards these videos. But you can see on the 1st of May, ISM manufacturing PMI, right? Manufacturing PMI, okay, below 50. That's not really what I'm looking at. What I'm looking at is this low impact print, right? The ISM manufacturing price, as you can see here, 60.9, massively above consensus, massively above previous, and that's trended higher over the course of this year. So purchasing managers in the manufacturing sector expecting prices to be higher, right? You then come and you go and have a look at I'll probably need to go another day back. Let's just go 04, and then we'll go 30. And then let's go and we can see then on the Tuesday, this is what I'm looking for. So labor market inflation, which is just wage inflation, right? Employment costs for benefits up above previous, right? Employment cost wages, up, that was above consensus, also was above previous, but the previous was revised from 0.9. So then you have a look at the total employment cost index, previous 0.9, consensus 1%, actual 1.2. Again, they are further inflationary figures, right? You then scroll a bit further down. Let's get back to this services PMI, which you can see in here. Okay, the services PMI, not really what I'm looking at. What I'm looking at again is this low impact figure, and the low impact figures for the most part don't make too much of a cause too much market moving. But again, this is something we need to be wary of. And you can see ISM services PMI, but then you look at ISM services prices, previous 53.4, consensus 55, inflation in the services sector expected to be 59.2 going forward. So the services sector inflation, wage inflation, manufacturing sector inflation. I then come back to last week, right? Let me just go back to previous week, and then we'll go and have a look at this, where you can see, right, Michigan consumer sentiment, right, that was weak. But again, I'm going to come down to the low impact and we'll have a look at this. Let me scroll down, come to Friday. And you can see Michigan inflation expectations, right? 3.2 previous, 3.2 consensus, actual 3.5. Now that is inflation of the next year, inflation of the next 5 years, 3.1% up there, again above previous and certainly above trading economics forecast. So with a number of inflationary readings over the last number of weeks, albeit low impact, that go in line with some other high impact figures, but inflation readings have been positive over the course of the last number of weeks, right? So what does that mean then going forward? I mean, the market knows we've got inflation struggling to come back down, right? And previously throughout all this year, you've kind of looked at, inflation being higher. And I still do think inflation comes in hot on Wednesday, right? Don't get me wrong, I still think inflation comes in hot on Wednesday. But where do we get the biggest move from, right? The markets know inflation is running hot, right? So if it beats consensus again, the markets know that, right? The markets are priced for one interest rate cut through to year end. Depends what metric you look at, kind of maybe 1.5 interest rate cuts through to year end, right? I just think, does a hot inflation print really make that much of a difference going forward? I'm not so sure it does, right? When we had 3 cuts priced in and 4 cuts priced in, then a hot inflation print absolutely makes a difference. But now we've got through that, markets have priced out the majority of the interest rate cuts that they initially priced in. Where does the bigger move come from? The bigger move comes from, in my opinion, with net long positioning on the US dollar. The market's expecting higher than anticipated inflation. I think the bigger moves comes from a miss, right? Is that what I think will happen? Probably not. Is that what I want to happen? Not really. From a reality point of view, it's kind of your analysis would point that way. But if we get a surprise miss, that should be easy longs on the S&P 500 and easy shorts on the US dollar, right? If we then come in higher than anticipated, it should be fairly simple longs on the US dollar, but may not be as long lasting as a big miss, right? So, back previously, the last couple of months, it's certainly last month, like I had taken a position before the release actually came out. I'm not really sure that's the best way of going about it this month. And if you're going to position yourself ahead of the event, you want to be positioned for higher inflation, you would imagine, but do you really want to be in that position for too long? I'm not so sure. Right, look at where markets are moving into it. You can see pretty broad-based US dollar weakness so far today, which is an interesting one, but ultimately you go to a slightly higher time frame, things haven't really changed. Right, markets just chopping sideways really for the majority of last week. You can see your Aussie, Kiwi, Euro, Sterling, all pretty choppy. Dollar Swiss, dollar CAD, dollar yen, all pretty choppy. Equity markets trying their best to push higher again. Equity markets seemingly just wanting to go higher than available opportunity. So, I think any beat on inflation on Wednesday, you probably look to go long stock indexes anyway off the back of it, due to the fact that interest rate cuts are majority of them are really priced out. Yields not sure what they want to do apart from today. They're kind of cruising lower, but after that big sell off, kind of not last week, the week before, post Fed, I kind of have just chopped around at the lows here. So, what to do right now? I'm not sure there's too much to do really right now, but what we're looking at on Wednesday, that's kind of it's kind of what the analysis would suggest: higher than anticipated inflation prints. I mean, I know consensus has them lower here, but my guesswork would be higher than anticipated inflation prints. Okay, you've got commodity prices have cooled down a bit, but the miss on inflation probably gets a bigger move this week. Should be fairly easy long stocks, fairly easy short dollars. But again, how you go navigate that kind of probably is a trade after the release kind of situation, I think. But anyways, I mean, what you look to pair it against, we'll see later on in the week. But you got UK labour market figures out tomorrow. What you're going to hope for then, with a bit of a pivot from the Bank of England, you had Ramsden move over to the interest rate cut side of life last week. You had Governor Bailey come out and suggest that interest rate cuts may be appropriate relatively soon upcoming. So all economic data for the UK, I think you've got to hope for lower than anticipated data prints, which would be a weakening of the labour market. Consensus is for this to be 4.3. anything above 4.3 should be easy shorts of sterling. You can kind of take your pick across the board on that one. So yeah, we'll see how that pans out in the morning, but I don't think sterling shorts from a risk to reward point of view are a bad idea into the release tomorrow. You know, on a lot of platforms like spread bet platforms and all that sort of stuff, it can be a little bit tricky from time to time trading the actual release. But if trading before the release, like risk 1 to win 5, it's a decent risk reward ratio if you can pull it off. So the hope would be for weak economic data from the UK in the morning. That then gets us a better move as it goes in line with what the central bank said last week. So let's see what that has to say for itself tomorrow. Nothing out today, but PPI tomorrow, CPI on Wednesday. We'll update further when we get around to it tomorrow on Wednesday's video. So best of luck over the course of this week. We'll update further later on in the week.